Okay, I think it's about time to start. 12 o'clock. Hello, everyone. This is John from Currensys, and I want to start off by saying that thank you to FX Street for sponsoring us and sponsoring this event. Want to say that they're very good partners of ours. We do have a microsite set up on their website, and we are offering a special on our program, $200 off because of the partnership with FX Street, and please check that out. Thank you for putting up that link. Because I'm limited on time today, I'm going to jump right into the program. First, I want to give a little bit of history about Currensys, its development, etc. It was developed about 8 years ago by a good friend and mentor of mine, Phil McGrew. Phil was a nuclear engineer, is still a nuclear engineer. First worked on subs for the Navy. After his tenure with the Army, or excuse me, the Navy, he worked for an electric company in a nuclear plant. Then he found that his passion for trading started to sell electricity on the exchange, and basically said, well, I'm making this company a lot of money. I need to go and work on my own trading, and was gravitated towards foreign exchange, or FX, because of its flexibility being 24 hours a day. It took Phil about 6 months in which to develop the program as we have it today, and is first sold the system starting in 2005. That basically I was one of the first Currensys members way back then. I'm here to tell you that trading, no matter whose system or whatever, is not easy. Trading any of the markets, forex, futures, options, equities, is not easy. And past performance is not indicative of future results. In order to have any type of success, you need a quality system, quality trading plan, someone that helps you, or a mentor, helps you to understand the program. Our system is a little different than most out there because it addresses the different market types that are in the trading environment. And they are trending markets, choppy markets, reversals, and breakouts. Okay, so what I said is that the different market types our system addresses those. And they are trending markets, choppy markets, reversals, and breakouts. Most systems out there are designed around one particular market type. And then if you're in the other three market types, usually the system fails in some way, shape, or form. Because our system addresses these, there are three different types of systems within our program: breakouts, reversals, and our dot system. And they work as one in conjunction with each other. When one particular market type we're in one particular market type, the other systems become quiet. This helps reduce the potential for false signals. These are all recent charts in real time using NinjaTrader as the trading or the charting platform for this webinar. I'm not going to go back in time years ago or even months ago and say our system worked and here's a great setup. I think that that's a little bit not correct, and we never do that. We report on every signal, whether it's good or bad, and we feel that obviously our system is better than bad. So all systems, all alerts, all signals are addressed on all of our weekly reviews, and you can find those on our blog site as well as our YouTube site. We have over 120 videos there of our particular signals. First program I'm going to talk about is our breakout system. And of the three, our breakouts consist of about 15 to 20% of all of our signals. I'm going to enlarge this euro dollar signal right now, or excuse me, euro yen. We did have a black dot, and I'll go over those a little bit later. But we have a breakout at 102.50 that triggered this morning, and this is a short. This was about 5 or 6 candles ago, so still current and in that trade at 102.50. Breakouts fill a void in our system very nicely because our dot system requires movement or oscillation of the MACD system. When MACD approaches a zero line or flat, the market signals are filtered out. You can see examples of these, as I said on my YouTube videos, where I said that look, mom, no dots. But breakouts need a consolidation period in order to trigger. And I've left on some of the breakout lines that start to calculate price. And if price would have, and we're looking at a pound dollar, if price would have come to 1.5771, we would have had a breakout there. We also have a breakout line here at 1.5811. Neither one of those two validated. Very important. The two systems complement each other very well, because breakouts need that consolidation period. Typically that happens during the Asian market, where we have a tight market squeeze, and then an ensuing explosion of volume, typically at European Open. Breakouts need about 14 days to calculate ATR, so the charts need to be at least 15 days. As I said before, breakouts need a squeeze period. And this squeeze period is a minimum of 8 candles or 2 hours, because we're looking at a 15-minute time period here, in order to trigger. Breakouts are good in Forex because there usually are periods of low volume with low volatility, which are prerequisites to breakouts. Most trading systems have a breakout system, and to that end, not all of them are very successful. There's a balance between when trading these, if the entries are too tight, false breakouts. If they're too loose, you give up too much. Price is neither cyclical nor forecastable, but volatility is. So again, when we get into that consolidation period, we can almost guarantee that we're going to get some sort of volatility coming. Low volatility begets high volatility, and high volatility begets low volatility. During the triggers period, the system is recording the highest high and the lowest low. Once this is done, the system adds a fraction of this ATR and gives us entry price, just like we got here on the euro yen at 102.50. With each new candle, price may change. So say here we have some lines that recalculated 1, 2, 3, 4 times. Price didn't break through this particular any substantial volume. So the price recalculated on each candle as it moved down. Finally, price broke through at 102.50. Good example of this one right here. We see again, price did not blow through. This is the pound dollar I'm looking at now. Did not blow through this price nor this price here. And again, on the dollar Swiss franc, it did not blow through here at 91.36. Our system requires a very specific criteria to trade. Price has to push through with authority, like it did on the euro yen. When the price is hit, the lines will change. The line changed from this oranges or violet type color to a red, which means short. Obviously, it didn't hit here or anywhere else, so we're only going to look at this red short right at this particular moment. Green line, if we were to have one, would be a buy. We do have on the dollar Swiss franc, it's trying to calculate a price. If price would move past at this particular moment 91.61, this line would turn to a blue. We do see one right here. This was just yesterday, and we had a nice breakout at 91.48, exiting at 91.78. So a 30 pip move on that particular breakout. Very important to understand that if we have lines that are plotting on the particular charts and they are yellow in its nature, this means caution. If we are in a cautionary breakout, that means that price has already traveled at least 80% of its daily ATR. We feel that at that particular point, the probability of success, having already traveled that far, would be less. Hence, we put a yellow line. It still will turn red or blue once that is triggered, but you know prior to triggering a red or a blue line that we have already moved over 80% ATR. Our exits for breakouts are pretty simple. We use a 314 EMA cross. We either use that or we use a dot in the opposite direction that has traveled more than 40 pips. So after 40 pips, we look for an exit on breakout. Our line does calculate and keep going forward for 20 candles on a 15-minute chart, that is 5 hours. And or we have a stop, which is 60 pips. And Colo, all the charts are 15 minutes yet for today. The next signal I want to talk about is reversals. Then we actually have one on the dollar CAD. This is this orange dot right here. And again, these are all live charts. When the market is widely deemed to be chaotic in behavior, the market becomes more predictable. Reversals must exceed a minimum number of pips. This prevents false signals. A minimum width mark assures that the market is going to be moving, then an orange dot would appear. Okay? For those of you who are Japanese candlestick pattern people, a pattern which occurs at the bottom or hammers are concurrent with oversold conditions. Hammers are characterized by a long wick relative to the body, hammering out a bottom. Great indication of bulls buying and refusing to let price fall. Best hammers close near their candle high. A short shooting star occur at the price tops and are concurrent with overbought and characterized by a long upper wick relative to the body. And here we see this actually, I'll blow up the dollar CAD. We see one of those right here, and we have a reversal dot. Good example of that. This is Japanese believe that there's trouble overhead. Bears selling stop price from going higher. Best shooting stars again close near their candle low. Reversals are about 10% of the signals generated by our three systems. Reversals are always, most always, against the trend. They are about a little over 50% accurate. Now you guys will throw up your hands and say, wow, that's not very accurate. But the reason we bother with these is when they are right, they are really right. And when they're wrong, there's still often an opportunity to exit with a very small profit or small loss. Very specific to the amount of time we allow a reversal dot to generate. If after five candles, the dot is not into profitability, we start to look for an exit. And on these particular reversals, one is our time, obviously 5 candles. we either look for a MACD cross or a dot in the opposite direction as our exit strategies. And someone asked, do we take trends into consideration? Yes, we do. And the system automatically identifies if we are with trend or not. And if we have, and I'll pull up a Aussie Dollar here real quick, and I'll get into this in a minute when we start talking about our dots, but blue dots are with trend. So these are long positions, and they are with trend. Red would be short with trend, and blacks really are taking into consideration that the market is in consolidation or in a choppy market. Our dot system I'll get into now since the question came up are based on MACD indicator. We like this over most all other indicators because, first of all, it's the least lagging we feel, and it's bound by no numbers, meaning that most indicators out there are bound by 0 or 100. MACD has no bounds. MACDs got started as a way to identify crossovers, where the fast line crossed over the slow, or vice versa. We found that the move was well underway when the cross happened. So we wanted to anticipate this cross. When momentum stalls is when we want signals to anticipate and enter the market. Hence, we got our dot system. To filter out these signals, MACDs must fall at a certain number or percentage before a signal is given. This calculation prevents, again, false signals. In most cases, dot will print 1 to 3 candles after a high or low of the MACD cross. And I'll give you an example here. This is the pound yen. We have a gray dot here. And what we're talking about is the low of this particular histogram, which happened here. And then 1, 2 candles afterward, our calculations start, and a dot was printed. And we can do that on pretty much any of the dots that we have. Here's our histogram high, then 1, 2, 3 candles after the histogram high, we had a black dot. To make dots even more accurate, we decided to look at a 4 times higher time frame as well. And the question came up, do we take into consideration trend? We do. And this is where it comes into. So if I'm looking at these 15-minute charts right now, our system also in the background is looking at 4 times higher time frame, which means a 60-minute chart. So if the two are congruent or in sync with each other, we would get a blue dot for a long or a red dot for a short. I showed you a gray dot here on the pound yen. The gray dots really are an attempt to take us out of the market. They are good indications of an end of a move, usually around some support or resistance, and are good exit strategies. Anybody have any questions along the way? Please, let me know. Do you enter positions at the same time the dot is printed? That's a good question. Our system and our rules are that if we have a dot that is printed, you have a specific price to enter the market, and that price is usually 1 to 3 pips above or below the high or low of that particular candle. Depending on if we're short, we would want it to be 1 or 3 pips lower. If we were to buy, we would want it to be 1 or 3 pips higher, depending on the wick of that particular dot candle. And why we do that is because we want the market to continue moving forward. We want it to show its hand and to make sure that it is not a false signal. Also, we have these little dots right here, and this, I'll expand the chart, which tell us what the entry price is. On the gray dot, it was 122.35. Okay, and it triggered at 122.35, and we are long this position right now. Our exits on dots are a MACD cross, which is usually our preferred exit. Allows us to stay in the market a little bit longer and allows us to ride out the wave of either buying pressure or selling pressure. A dot in the opposite direction, which we would do in that scenario, would be a stop in reverse type of scenario. And or time. And time is very important, and that's really the only time where we are using any sort of discretion. If after a certain amount of candles, and usually either 8 to 10 on a black dot or a with trend red or blue, we are looking to if we are profitable after that amount of candles. If we are, we stay in the market and manage the trade on a candle by candle basis after that. Time frames in which the system can be traded, really anywhere from 5 minutes up. We don't really like going down any further than 5 minutes because of market noise. Really doesn't allow the system or pretty much any other system to filter out what is a good signal or a bad signal. So anytime from 5 minutes up. We like the 4-hour period quite a lot. We have many examples of the accuracy of our 4-hour signals, and we also like the 15-minute time frame as well. Also, I want to make note that our system is not only specific to Forex. Most systems out there are either right-fitted or made to or designed to just trade one particular pair. Our system can be traded on all pairs and all time frames, as well as futures, options, and equities. So you're not just locked into a particular market, and we have not right-fitted or made our system, specific to one particular market. And that is actually a good thing because it allows us our system to be robust in all of the market types that I talked about: trending, choppy, reversal, or breakout markets. I've been asked how much time does a person need on average to get used to the system. And we talk about this a lot in, when people buy the system. Very important to understand our rule set. I believe that the system is pretty easy to understand once you understand the rules. Our system comes with a 240-page manual, but don't let that scare you because we're here and support you one-on-one if you need help in understanding the rules and how the system would work. Usually, if someone is a professional trader or wants to trade professionally, and even if you don't, even if you want to trade 4-hour time periods where we typically get a signal, say 1 to 3 a week, your learning curve is shortened quite a bit because of our one-on-one and consistent support of the system. So really, to get back to your initial question, I would think that someone could be proficient at using the program if they, understand the rules within a couple weeks. We have a yellow dot on the New Zealand dollar long, and that validated at 83.47. It's about break even right now on this particular trade. So we see a lot of dots on the system right now. We see the euro. I'm bringing up the euro dollar or euro yen chart right now. we're in a great dot here that validated at 102.99. Market's at 102.37.90, 102.37 at the moment. Plus, we had an additional breakout. If this gray dot were to validate, this would take us out of both of these particular trades. And our black dot, signifying a choppy market, would be well in excess of 90 pips on that particular trade, and our breakout would be somewhere around 20-ish, 110 pip move. Is the system 100% mechanical except for timing? The system is mechanical, yes. I showed a reversal. Can you guys still see the charts? Okay. Here was a reversal on the orange dot right now. It is in the profitability. That particular signal validated at 99.97. And we also have a black dot, which also validated. And it's actually validated right now. So this would be indicative of a reversal. Now, we are now into 1, 2, 3, 4, 5, 6. This is the orange dot right here. Everybody see that? Right there. We're now at 6 candles into this particular trade. Done everything I could to open it up for you. It's okay in the center. All right. So let's leave it in the center. Here is the reversal. As I said, it validated at 99.97. Price had moved up beyond the bands, and now we're looking for a reversal downward. This is above the price, so it's down or short. Now we're 6 candles into the particular signal, so we're going to manage this particular trade on a candle-by-candle basis. If price does not continue to move downward, we would look to exit this particular trade. Good. Len, thanks for that. Dots do not reprint. This is not some EA out there that would reprint because of something was a good trade, and it decided that it wants to reprint, and that was a great trade. No. If if a signal were not to validate, it would be gone forever. It does not come back after a certain amount of candles, usually being 5. If price does not validate, the dot goes away, does not come back. Unlike some systems out there that repaint and say, oh wow, that was a great trade, ours does not do that. If it's gone forever. Now, you can bring them back if you decide that you want to back test only, and it would still not be a valid trade, but you could bring it back. But in full operation, in real time, it does not come back. Is the timing the discretionary part of the trading? Meaning, can you clarify that a little bit more? The rules are very specific. We have specific rules of entry and exit. If you follow that, there really isn't any discretion. The only discretionary part that I've even talked about today was a candle rule. And if after a certain amount of candles you want to enter that or exit that particular signal, you can do that. That's the only time that we really want you to use discretion. And that is to get out of a particular trade if it's non-performing. Other than that, our rules are very specific for entry and exit. Boyke, I didn't see a question for you. What about the Aussie Dollar? Aussie dollar, we were stopped out this morning. Blue dot here entered the market at 102.27 and we're sold out at 107.54. Happens. Goncalo asks, what's the frequency of trades on a 15-minute time frame? On the 15-minute time frame, we're looking at usually 20 to 25 signals per pair per week. On a 60-minute chart, we're looking at somewhere around 10 to 12. On a 240, 1 to 3 trades per week. Boyke, does the system trade automatically? That's another good question. We're in the process of coding to automation, but at this particular moment, these are manual trades. We would see a little bit of, additional follow through, but market's kind of flat today. And I do want to bring up here on the dollar Swiss franc, we do have, as I talked about before, breakout numbers. Still a breakout at 91.61 that has obviously not validated yet. And additionally, this black dot short did not validate. Okay, so we would not take this particular trade. Yes, you can backtest. Boyke also asked, how do you get signals? Signals are generated either on the screen, visually, or it will send you an email or text to your phone for entries and exits. Goncalo asked, can one backtest even if only manually the recent performance? Yes, you can. There is a backtest mode on in each of the indicators, which I said would put all of the signals on your charts in order to backtest the accuracy of those particular trades. And I can tell you from historical, and you guys can always see that on not only our blog page, but also on our YouTube videos, our accuracy is quite high. Again, past performance is not indicative of future results. Can't guarantee that the system is going to give you winning trades going into the future, but because of our excellent track record, I would say that you could probably get, the same type of accuracy going into the future. The success of the system on breakouts is around the 60% range. On reversals, I already said that that's a little over 50%. And on the dot system, our workhorse, which generates about 70 to 75% of the signals, is somewhere in the 68 to 75% accuracy. Majority of the breakouts don't ever trigger because they are specific in their entries, and if the price doesn't blow through the entry, then that particular signal does not validate. So the majority of them do not validate. Does it work on the same system as mentioned platform? Our particular platforms that we quoted the program to are eSignal, Multicharts or MCFX, TradeStation, NinjaTrader, and also Strategy Trader by FXDS. We do recommend certain stops, and usually they're ATR based. We talk about 3 ATR quite a bit as being our stops. You can also use swing high, swing low of the day as a good particular stop. The one that I was stopped out this morning on the Aussie dollar was a 3 ATR stop here. Guess you probably don't see very many people that say they got stopped out with their systems, but truth be told, Again, we talk about every single trade, regardless if it's a winner or a loser. Losing is part of trading. It's how you manage those losers, whether or not you're going to be successful moving forward. 3 ATR. Well, ATR is an average true range, and it's based on the last 14 candles. On the particular Aussie dollar was around 10, or a little less than 10. 8 was 1 ATR. So on that Aussie dollar, which I got stopped out on this morning, was a little less than 30 pips. The entry was 107.27, and we were stopped out at 107.54. So 27 pip stop. Again, because of our partnership with FX Street, we have given a discount of $200 off of the system. That still comes with unlimited support, obviously our manual, the indicators, etc. And if you guys would shoot that link to your microsite, that would help. You're talking about a risk reward. Risk reward should be at least a 1 to 2 or 1 to 3. Minimum 1 to 1, obviously, but 1 to 2, 1 to 3. Talking about risk reward. We also have a live trading room on Mondays and Wednesdays, starting at the European Open, which is free to all of our Currensys members. And you can find the login information on our blog site. For those of you that, yes, I'll get to that in 1 second. Hopefully people can see our, this is a silver contract this morning, very nice short at 33.84. We covered this at 33.62. Also had a breakout that covered at the same time. And now we are short again at 33.68. Market right now is 33.58. Good numbers there. This is silver contract, just to show you the flexibility of the system. For those of you that deal with crude, here is a reversal. Had an explosion. This is a great example. An explosion in price. Reversal dot printed, and also a gray. Both of which was a nice winner at 99.81. We covered those from 100.24. Very nice trade there. Also a long happened. Here's our black dot, and we entered the market there at 99.81. Covered at 100.06 on a gray dot, and we are short now. This particular movement here. Good examples of a reversal again. And Wakey wants to know about ATR stops. ATR is average true range, and it's based on the price of the last 14 candles. If the price of those 14 candles, the average was 10 pips, then 1 ATR would be 10 pips. So if we had a stop of 3 ATR, that would mean that we would multiply 3 times 10, gives us 30 pip stop. Reversal. We had an explosion. Well, let's talk about this one here that we got stopped out on. We had a short. It validated. We got stopped out. Had this long explosion of volume and price. Reversal dot happened. Good example of how the reversals work. We entered the market at 100.24, had a dot in the opposite direction here, covered at 99.81 and went long. So we short the market here. Dot happens, exit strategy, go long, another dot, our exit here, and now we're short the market. Good example. This was earlier this morning. We had another short at 99.80 down to 99.68. This is a 5-minute chart, by the way, not a 15. Any questions on this one? The dotted lines are entry to exit. So I enter here, I exit here. The line draws because I wanted you to see what the market did and what that particular order did. You can choose what trades to take, yes. We report on them all, so regardless of if they're winners or not, but you as a trader certainly can decide which particular trades you want to trade, yes. And I'm going to bring up a gold chart. Tremendous trade this morning. Short trade. Short entered at 1727.7. Had also a breakout here. And we exited both the breakout and our short dot at 1720.4. That's a big move. Then we had a gray dot long at 1722.6 up to 1727.5. And if you guys know that this is $25 per tick, those are big numbers, okay? And now we are short the market at 1727.1. A breakout is different than a reversal, yes. A breakout, as I said, is a totally different system than the reversal system. So breakouts are specific to volume and price, like we have here, this red line short at 1727. Reversals are usually around an extreme. You can just look at it as a rubber band, okay? You stretch a rubber band to a certain point and it wants to snap back, okay? So if we have a explosion in price like we did here on the crude oil contract, we had an explosion in price up. This very large green candle here, reversal dot. We've sort of felt that the market couldn't go any higher at this particular moment and wants to snap back. And it did snap back. It came back down, right? From 100.37 down to 99.81. That was our exit strategy for this particular reversal. So it's an expansion outside of its normal trading numbers, okay, and price. And once you get that explosion, the market wants to snap back and go back to its norm. Again, it's the gold contract for you gold folks. That's 1, 2, 3 winners this morning. Not too bad. Okay, I think I'm coming close to my time being up. But if you have any quick questions, let me know. Also, I'm going to put in my email address, john@currensys.com. If you have any specific questions, please let me know, and I will answer all emails back as quickly as possible. It's john@currensys.com. Please send me any emails that you might have additional questions about our systems. We will also give you a free trial for a week on the various platforms so you can see the system in action before you buy. So let us know. Again, john@currensys.com, and we look forward to working with you into the future. Thank you.